All right. I'm gonna go ahead and get this started here, recording this rolling. Appreciate everybody who has joined here on a Thursday night. Gonna be taking a look at a lot today. Again, a lot of a mental analysis when we are looking on Thursday nights. The reasoning for this is there's not gonna be too many setups, right? As far as the week goes, yes, there will still be available setups, but if they are something that I'm looking to trade on Thursday or Fridays, then I want something that checks every single box as far as what I'm looking for, right? The perfect setup, something that I'll be able to say, okay, I can look to trade that, and then I'll trade that promptly, right? But today we're going to be doing a lot of mental talk, a lot of mental analysis as far as what you want for yourself as a trader and tips and tricks to get you to that level, right? So we're going to talk about sticking to your bias until proven wrong. We're going to do an example with that as well. On the charts on XAU USD, we're going to talk about when you should look to trade as far as what type of trader you are, if you're a swing trader, if you're an intraday trader, if you're a scalp trader, and then we'll also talk about how to properly trim profits with that same type of mentality in mind, right? We're going to also talk about setting goals for yourself as a trader, when you will become profitable. And at the end, we'll get into a Bitcoin and ETH analysis going into the weekend. If we do have time at the end, you guys can ask me for any charts or anything like that, and I'll feel free to do some live TA for you guys. But with that being said, I just want to go ahead and get this started at sticking to your bias until proven wrong, right? So a lot of the times, and we've done a lot of streams where we talk about sticking to your bias until proven wrong with both the continuation and the disapproval theory. The continuation theory, right, is believing that the price or the asset is going to continue in your given direction based off of your bias until you are proven wrong. Meaning if you are looking for longs over and over again, right, you should continue to look for longs until you are proven wrong in those longs, and then now have the availability to do shorts. But with that being said, right, as far as what you're looking at as a trader and as a just mental analyst, when you're looking at these charts and trying to take these trades, right, if you get stuck flipping bias over and over again because maybe you got stopped out on one position because you were too impatient, so you decide, okay, I got proved wrong, tried to flip it to the other bias, you can start to get into that mentality that we don't want as traders, where you believe you have that analysis paralysis, right? Something that we don't want to look for as traders. But as far as continuation and disapproval goes, for the disapproval side, that is literally what we were just talking about, but the opposite. So now that you have been disproved on your continuation theory one way, right, you're constantly longing to the upside, looking for upside over and over again. And now that you have been disproved, you have the availability to then look for shorts, right, or look for the opposite bias. So what those are and what those are going to look like visually, right, and we'll just do a little theory and then we'll show it with candlesticks as well, is something like this. So going over continuation and disapproval, as far as continuation goes, right, if I have a downtrend, I have a break of structure to the upside, I have an entry here, right, and I'm targeting this week high. We end up getting up that week high, I end up making my profits, price starts to come back down. What am I going to continue to look for, right? Longs until I'm proven wrong. So my most recent low that created this new high is still holding as my most recent low, as my strong low that caused a new high. So I will look for continuation to the upside if this low is not taken out, right? That's how we can begin to track the markets on our own over and over again as we are coming to play. But for the continuation theory, right, you'll just continue to look for those breaks of structures to the upside to continue to take price to the upside. Now for the disapproval theory, right, we'll show the same exact situation on this side. Price comes up, makes a lower high, right, breaks structure to the upside. It comes up, you have your trade, you're out here, and then you're at this point in time, right, and you're looking for the next demand zone, and then it comes to the demand zone and it does this. It breaks that demand zone to the downside, right? Now you've been disproved on your longs, and you can look for the area that actually broke that structure point to the downside, that strong low that caused a new high, and you can look for the mitigation of that, right, that return to origin, and then you can look for the continuation to the downside, now flipping your bias overall. So being disproved on this demand zone here now gives you an opportunity for that supply zone, right, and not being disproved gives you the opportunity to continuously look for that continuation to the upside. So just a little quick tip as far as how we can continue to stay on the right side of the market even though we are wrong in situations, right? I want to be wrong in certain situations because that's going to now give me the ability to understand what's actually happening on the chart, right? And I'm not just continuously looking for the same thing, even though that's not what's there, right? I could believe it's there based off of the manipulation, but that is not what is there. So I'm going to look for the disapproval, instead of that full-on continuation. So we're going to go ahead and talk about this now with candlesticks, how we can look for this even in certain zones that we might be scared or iffy or feel like, oh, it's maybe all the way in discount. Why would I continue to look for shorts or premium, right? So we'll go ahead and talk about that in just a second here with a certain XAU short that had came up. I believe this was yesterday morning on the lower time frames, right? So we were coming down XAU into this weekly zone of demand. Let's go ahead and show the weekly zone of demand, right? This is your low that caused a new high. Why is this the low? Because we rated liquidity to the downside here and then broke structure to the upside here. So this was your most recent low on the higher time frames that caused this high right here. After that occurred, we had a rally-based rally, right? This candle you can see broke to the upside right here. Your candle before lies right here, as well as that doji candle now telling me that this weekly candle was in consolidation, meaning that there was a battle back and forth between retail traders trying to either short this to the downside because of this large candle to the downside right here, right? And people trying to long. Instead, you had that reversal, that liquidity rate to the downside, break a structure to the upside that now brought those all-time highs, right, on XAU. But with that being said, you have your demand zone that is right here, and we are coming down and now mitigating that demand zone. But let's talk about the lower time frame structure as we were in that zone, right? So this was, yes, this was over here. I'm going to go ahead and delete this. Bring this back right here. All right, and let's talk about the mitigation of this zone right here. So as you guys know, for probably the past couple months now, almost 3 months at this point, we've been talking about shorts on XAU over and over and over again, right? Shorts, 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 until we got to this zone. But even though we still got to this zone, no longs were presented yet, and I'll tell you what this means, right? So we had this high here, a strong high that caused a new low. So your overall bias is still bearish, right? We're still looking for downside overall until we are proven wrong in these situations, right? Even though we have mitigated the zone of demand and had this little move off of it, what do you think that's doing? What do you think that's doing to those retail traders or to a trader who placed limits on this zone, right? They're like, okay, it's actually reversing. We're going to be good to go. I'm going to set my stop losses underneath this low right here. But mind you, overall, we are still bearish. Right, so looking at this chart, looking at what we are at right now, there was no break of structure really with impulse and a higher low creation for me to take this to the upside. The reason I say that here is because this high caused a new low. This was your internal high that caused a new low, right? So your internal strong high lies right here, and your internal weak low lies right here. Your overall strong high lies right here. Your overall weak low lies right here, right? So looking at that and understanding that, okay, this high caused this new low, I'm still looking for downside until I'm proven wrong from either this high here or this high here, then we can still see that continuation to the downside into these lows. And this is something I talk about a lot too with limits, why I don't personally play limits, right? Because it's not there yet. The setup is not there yet. It could come to your zone and it could destroy your zone, right? And that would disprove your bias, and then you could look to take that trade. But with the opposite end, and in these situations, if it isn't there yet, continuously look for downside. We haven't had a break of structure from an overall strong high that caused a new low yet, and we'll talk about what it means right here. We created another new low, right? So as we created that low right here on the 2-hour chart, this is now your strong high that caused a new low. So we can now expect this low to be taken out. This is your next weak low, your next strong high internally, right? So looking at this, understand that, okay, we're coming up into areas of fair value, right? Areas of imbalance from a candle that had caused the new low, right? In the area of supply as well, we can sit there and say, okay, we'll still look for the continuation to the downside, to these lows now. So we'll look for price to come up here, create that lower high, and then continue to the downside from there. Taking a look at this, right? Just go ahead and play it out here. It comes up, it takes that high. And after it takes that high, comes up into this zone, mitigates that zone, and then we see that break of structure to the downside right here. We now have that ability, right? We're back in premium as well. So let me go ahead and mark this out for your premium and discount zone from this low to this high, right? Back into premium. looking for a lower high, looking for a continuation to the downside until proven wrong, right? So let's go ahead and see that break of structure to the downside here. We have an area of supply that we could look to take a trade off of and look to take it lower, right? Let's talk about what happens. We can see that it starts to make this buy side liquidity, right? But is it bullish yet? No, it is not, because this high still caused this low. Internally, yes, we've shifted structure, but that internal structure shift was just for the move up into premium, into these fair value gaps, into these supply zones, right? To see the continuation to the downside. Once we mitigate that, we start to see this break a structure, right? Telling me more supply is being created. That entry could have been over here, with the target being this overall low right here, right? So let's talk about what happens. We can see that now it just drops off, still dropping off into those lows, right? It's not very strong. It's not showing a lot of displacement to the downside. It's starting to create a lot of buy side liquidity, but your overall structure is still bearish. No matter how these candles are looking, right, your overall structure is still bearish. So you're looking for shorts to here with delivery into these lows right here. Once that occurs, right, you have delivery into those lows. You can now look for your next area to short. Looking at this though, I can say, well, where would I look to short within this certain scenario? You could bring it to a higher time frame, right? There's not a lot of fair value gaps or a lot of imbalances, nothing with displacement that tells me, price is going to move this way, right? Price is going to continue this way after coming up, making a lower high and continuing to the downside. We can see that all of these wicks are being taken care of. There's no displacement, no imbalance that is being left behind. It is all being taken care of on this move to the downside. Now let's talk about what happens when we get into this area, right? Now that we have taken out that low, now that you are out of your trade, right, where would be the next area we would look to short? Well, there's nothing that I see here, so I'm just going to go ahead and wait for some more structure to then come to play. Structure comes into play. Well, what do we have here? Looks like we're shifting structure. Looks like we're starting to make a move to the upside, right? So we could see continuation or a possible reversal to the upside at this point in time. Now I'm disproving myself, right, if that is being shown as far as continuation to the downside. It comes up, makes a internal new high, and we're looking for a higher low within this area right here. And then there you go. You get the wick, right? Your liquidity rate to the downside, it comes back, fills that lower time frame fair value gap or lower time frame imbalance, and then you have your move to the upside. Now you can see, right, that okay, now this has been disproved as far as my move to the downside here. So where can I look to take a trade next, right? Obviously we get the liquidation, break a structure. Here's your candle. You have a fair value gap as well that you can draw out like this. Look to take entry on. Right, and now take it to the buy side liquidity. So now that I've been disproved on my short narrative to the downside because I had this break of structure to the upside with impulse, right, I can now look for the reversal, look for the move to the upside at this point in time. Even though we're still in that demand zone, right, even though we're in this demand zone right here, in this demand zone right here, I'm not looking for longs until it is being shown, because this could easily create more supply, continue to the downside, and just completely disprove this demand zone, right? So now that you have entry right here, targeting now your buy side liquidity, what do you get? That disproval, and now that move to the upside. So now I'm still continuously, right, being on that same path and still figuring out where price is going as far as what I want to look to do when I'm taking a trade, right? Targeting buy side and sell side liquidity. When you look at these certain situations like this, it becomes very, very simple, because now that you have been proved wrong, then you have another opportunity, right? Once one door closes, another door opens, and that's how it's going to work every single time as far as looking for these trades like this, right? Where I'm still constantly looking for downside as this high causes a new low is formed, and now that that low is formed, we get that break of structure with impulse, right, putting us back into this range right here, as well as showing that fair value gap, that area of imbalance, right, from price pushing so quickly that spreads were too wide, they opened up, right? So not a lot of orders could then be placed within this certain scenario right here. So looking at these charts like this and looking at these situations like this, do not get discouraged if you are wrong. Take that as a lesson, right? You can easily go back and look at trades that you have lost and say, oh, okay, that actually makes a lot of sense why I lost there, because it shows me right here on the chart, and it will show you on the chart every single time, right? So looking at certain situations like this, keep to your bias until you are proven wrong. I'm continuously trying to take this lower, even though it's showing me this lethargicness, right, on these moves to the downside. It's not there yet. There was no break of structure to the upside with impulse for me to say, okay, I want to long now. There it is. There's that footprint. There's that algorithmic introduction that says, oh, okay, now I can long. Now they want to push price to the upside, so I can look for the opposite at this point in time. And you get in certain situations like this, right, where price just completely takes off and you are now within that reversal of that trade, and you can take it a lot higher or a lot lower on the opposite end, right? So stick to your bias until proven wrong. Stick to your bias until proven wrong. That's going to be the biggest thing that I talk about. I'm literally going to talk about it every single stream, right? Every single time I look to take these trades, every single time oh wait, here we go. That was annoying. Okay, so every single time, right, I'm looking for these charts, looking for the lower high to the lower low. Lower high, lower low. Higher high is made, I am now disproved, right? Look for the higher low. Once the higher low is in place, then I can now take that trade to the upside, right? Keep it simple. Keep it simple. So definitely always stick to your bias until proven wrong. So now I want to talk about when should you look to trade, right? And this is going to be different as far as what type of trader you are, whether you are a swinger, right, intraday trader, or a scalp trader, whatever you like to trade. And this is also going to be based off of sessions on your life, right? Meaning certain session times that come out, where you live in the world, your certain hobbies during your day. When are you able to actually maintain clarity, sit down and say, oh, okay, I'm can't be stressed, right? I have no outside distractions, no anything like this. This is my time. I can sit down and look at these charts, and it's going to give me all the clarity that I need, right? Whenever that time is for you as a trader, figure out that time and now decide to come to the charts every single time at that same time to look for your setups. Meaning, personally, right, I'm on the East Coast, so New York session is very, very nice for myself to trade, right? So if I can wake up every single morning, 7:30, 8 o'clock, right, go look at the charts at 8:30, look for that algorithmic introduction. Once it comes into play, then I can look for my setup targeting the either buy side or sell side liquidity of my structural narrative, and then I can walk away from my charts. And now all of a sudden I have a 20-minute workday on the charts, right? Instead of being on the charts for 8 hours a day and trying to find all of these different setups, I now have one setup a day, 1 to 2 setups a day, right, that I can look to trade on. And this is going to give you now that ability to treat this as a job as well, because now you're coming to the charts at the same time every single day. You're looking for the same thing every single day. And that also brings that repetition. And what is repetition going to bring at that point? Confidence, right? Because it's the same thing that you're looking for over and over again. You know the results of what it can bring you. You know that it works, right? It's just actually going in there and finding that time that works for you as far as session times go. And for certain pairs, we'll talk about that as well, because they will be correlated to certain pairs as far as when they will move during certain times of the day, right? But literally, find that time for yourself. Find that comfortable time that you can sit down at the charts for a certain session to look for that algorithmic introduction, to look to take your trades upside or downside. Now, as far as swings go, right, we'll do it from swings to intraday to scalps. So for intraday, if you're looking to trade every single day, then look for those session times. Look to come down at the charts for those session times every single time. Now, personally, how I treat swings, right, because I'm not always going to be trading, and I say this because I'm not always going to be trading these weekly, daily, right, to 1 second plays. That's not going to come up every single time, because I'm going to be waiting a while as far as that goes, right? I might have to have a lot more tickers, or I might be having to look at different situations to catch higher time frame trades on lower time frames and hold for a higher time frame scenario, right? So what I do as a swing trader, when I have my narrative, right, I have my swing. We had the break of structure to the downside over here. We came back up, mitigated this area of supply, and I now have my entry on lower time frames within this area right here, then targeting this demand zone down here. So let's just draw this out, put this right here, right? If I'm in this swing at this point in time and I have my targets and everything is set, and a week goes by, 2 weeks go by, I'm in profits, whatever it is, I can now track this, right, to look for certain spots of reversals or a possible hedge, right? Meaning Price is starting to come down to these lows right here. It still hasn't taken out this low yet, and it looks like it's possibly reversing, right? So I can now hedge myself within these scenarios and say, okay, price came down, right? Broke structure to the upside right here, came back down, filled this little fair value gap that we have right here, and then broke to the upside. I have a demand zone that lies right here. I can now target this weak high, right? So I can now enter targeting this weak high for my most recent structural narrative and be able to hedge and gain those maximum profits on these certain swings, right? Because I'm not looking to just put all of my position in this trade and then hold it for weeks, right? With these lower time frame entries and these higher risk to reward trades that you're able to enter, I'm taking profit a lot quicker, meaning I take half my profits or 25% of my profits, right, on a 1 to 10, 1 to 5, whatever it is, and then I can hold the rest, right, and let that go, use my other capital to hedge at that point in time. Now that price comes down to these areas, right, we mitigate this area, this institutional candle of this low that caused the high right here, mitigates that, shows that break up here, comes back down, creates a higher low. We create another higher high right here. When we break structure, you now have your area of demand. You can look to take this higher into this area of supply from your next recent high that caused a new low. This is your next most recent range. We can draw it out like this. Just put this down here from this low to this high. And as you can see, overall, we're just continuously making, right, lower lows, lower highs over and over again. Lower high, continuation to the downside. Overall, I'm still bearish. I have not disproved myself as far as this goes. But because a setup came into play, I now have the ability to hedge to the upside, meaning it came down, broke structure to the upside. I have this area right here. I can look to take that trade then to the upside into these weak highs right here. Once those weak highs are taken out, right, we can see the continuation and the reversal to the downside. So if I'm on lower time frames waiting within this area, once we come back into premium and break structure to the downside, I now have another available entry for my swing, right? So this way, you're now playing both sides of the chart, and I'm not being disproved on my overall bias, right? But I'm still playing the chart to the upside. Even though I'm catching longs, doesn't mean this is wrong, right? Until I'm disproved, meaning until it breaks this structure point to the upside or breaks this structure point to the upside, then I won't look for those longs overall, right, to take them to these highs right here. We need to continue to stay relative to our structural narrative, meaning a lot of the times, right, people see moves like this. They see this large break of structure to the upside internally, even though we came up and mitigated the supply zone and it started to move downside, right? They see this large move to the upside and they're like, okay, demand zone, I want price to reverse right here. I want, and that's key. That's the key word, right? Is I want price to reverse right here because it's not there. It's not reversing yet. So if you look at these certain situations, price comes down here and it does not reverse, right? It doesn't break structure to the upside with impulse. We can see that all it did was just raid the highs. This was your high that caused a new low. All it did was raid internal highs and then create more supply and continue to the downside. From our overall higher high that caused a higher low, from our overall weekly bearish standpoint, right? So within these certain scenarios, don't try to look for these. Don't want price to move a certain way, because the minute you start to come up with something that simply isn't there is the minute that you start to begin that downfall as a trader. The minute you start to doubt yourself, the minute you start to bring certain situations into play, the minute you start to sit down at the chart for 8 hours in a row staring at the 1 minute chart because price isn't going your way, right? That does not help you as a trader. All that does is just take away from your health, right? Your mental psychology, your health in general. If you're sitting there for 8 hours a day, it does no good for you trying to come up with something that simply isn't there. And that's as far as profits go too. I know a lot of the times, and a lot of traders will find a TP that they like because it's going to make them X amount of money, right? When that's not how we should be taking profits. We should be looking to take profits based off of the chart, based off of that structural narrative. And if you like the R, right, then you can look to take those profits. We're going to talk about how to properly trim those profits as well with this setup that we have right here, with this analysis that we had just done to make it simple for you guys. And then we're going to talk about setting goals for yourself and when you will become profitable, right? So when I'm looking to trim profits in certain situations like this, within a counter trend scenario, I'm looking to trim profits within premium or discount, meaning within this certain situation right here, from the range of this high that caused a new low, I'm going to be trimming my profits within premium as well as with structural liquidity. And structural liquidity is going to be weak highs and weak lows, meaning that this low caused this high right here. So I can expect this high to get taken out if I have that confirmation once we get to these areas right here. I get a break of structure to the upside, so my entry is right here, now targeting this overall weak high, right? Opposite is going to go for the other end, meaning you have price coming down or making an uptrend, right? Coming up, break structure to the downside with impulse. You're looking for your entry over here. You get confirmation of that zone. You can now look to enter. Where are you going to be targeting first? The weak low that was formed right here. As this high caused this low, this is your protected high and this is your weak low. We can expect this to get taken out. Now, if you're looking at a certain situation like this and you also have an unmitigated demand zone down here, or an unmitigated imbalance or whatever it is, that's now bringing more probabilities into play, right? That's now bringing more confidence into this certain situation right here, because now I'm able to enter right here, now targeting that weak low that was formed right here, right? So now that I'm entering, targeting the weak low, as well as I have a demand zone overall, right? Price could easily do something like this, where you enter, it takes out the weak low, it mitigates that demand zone, and then continues to the upside. Was I wrong on this certain situation? Nope, because look, right? We had the entry here. We had our take profit here within discount. And we had that demand zone that was here as well. So now that it mitigated that demand zone, I was able to take profit at these lows right here, at this area of liquidity. And then we saw that break of structure to the upside following. I now have the ability to enter my trade here, right? And now take it to the overall weak high. As we are in an uptrend here, this is the strong low that was held, and we broke structure to the upside into now the weak high right here. Let's just draw this out as a different color to make it simple, but this is your range, right? Your overall range from this low to this high. And as you can see, we come back into discount, raid lows right here, and then start to make the move to the upside. This is your displacement to the downside that says that this counter trend was starting to come into play. We got the confirmation of that, so now that we have that entry right over here, we can now target that weak low of the overall trend. It still held the low of the uptrend, right? But we're targeting the weak low of this internal trend right here. So instead of saying, oh, it's going to reverse right here, I'm going to target these lows down here, right? I now have a relative take profit that I can take profits at based off of my risk to reward if I like it, right, on this move to the downside. And then once it comes into these areas, it mitigates that demand zone. I have a break of structure to the upside, so I can now long this, targeting now this high from the overall trend. So you'll start to see these ranges and you can start to play the moves within, right? Because we still are looking for the overall narrative. We are still staying to our bias as far as that goes, but I can now hedge in certain positions like this, right? Let's say I was in a buy down here or a buy right here, and then price comes up to these areas, shows that displacement to the downside. I can now look to hedge right into that area where I had bought before. Once it comes down to that area, I'm stopped out at break even on these buys back here, as well as I'm taking profits on these shorts right here. I wait for the reaction to this zone. Is it going to break it to the downside, create some more supply so we could look for a lower high and continuation downside? Or is it going to hold this low, break structure to the upside with impulse, hold that demand zone after rating lows, right? Taking out the liquidity. All the early longs are now taken out of this trade at this point in time. Right, and then you get that break of structure, so you say, okay, now we can look to take this trade, targeting now that weak high. Opposite situation goes right for the long side, but it's going to be this type of scenario every single time as far as looking to take profits. So take relative take profits, and I like to take them based off of R as well. So if I was in a certain situation like this, right, maybe I'm on a 1 minute chart, 2 minute chart, whatever it is, looking to take this trade, right, and it comes up into these areas and I'm like, I don't really like this because I'm only offered 2R on this trade, then I'm not going to take it. Don't take those low quality setups. Take those high quality setups that you are confident in based off of your narrative and based off of the overall trend, right? So in these scenarios, if this was a 2R, I wouldn't look to take this, right? If this was a 5R, yeah, I would look to take this. But certain situations like this, you can now start to find the overall narrative and then play the lower time frame structure up until your overall narrative, right? So take profits at relative spots. And we'll talk about XAU as well right here. If I was taking a long right here, right, because this zone was mitigated and lower time frame structure showed me that it wanted to go long, where would be my most relative take profit, right? Within this range right here, this high to this low. Right? Within premium of this high that caused a new low. If I entered longs right here, I would look to take this into premium of this high that caused a new low. This candle before the candle that broke structure to the downside with displacement, it left an imbalance as well. Your area of supply, right? We see it comes back up into there. So now I can take profits at the supply zone, still expecting these lows to get taken out. But what if this happens, right? What if I'm in longs right here? I take profits right here and then it reaccumulates and breaks higher. I now have that entry down here, right? So now within these certain situations, even though I took a relative take profit and it reversed, I didn't need to look for the reversal, right? I wasn't trying to catch the bottom targeting these highs right here. But now that it has shown me that I can look to now target these highs right here overall, right? So allow the chart to tell the story for you and don't make up that narrative yourself. Don't try to sit there and say, oh, I know where it's going to go, or I want it to show this, right? Because until that is shown, it is not going to come into play, meaning until all the early shorts and the early longs are out of that certain range, it is not going to make that move, right? So in these situations like this, when you're taking profits, take them at relative spots. I'm not going to look to sit here and enter a long, right? Long position to the upside right here and say, okay, stops underneath this low right here, right? Targeting now this high. Or even saying this low caused this high, area of reaccumulation, right? Area of demand. I'm going to now target this high. Because then you get in situations like this where you're constantly on the wrong side of the market and then it goes down even more and it shows another move and you're like, okay, I'm going to do it again. Right? Maybe it's just accumulating, whatever it is, taking another long, targeting now that high. And now you're stopped out in your positions over and over again, trying to catch something that is not there. So allowing that to come into play, allowing that algorithmic introduction to show is going to bring much more clarity. And that's all going to come with patience. Impatience can be terrible, meaning impatience can start to get you to believe something that isn't there, as we were talking about before. Believe something that has not come to play yet. We talk about the waves, right? If you're going to surf, why would you surf if there are no waves available? If there are no setups available, why are you looking to take that trade? If you are going to surf and there's no wave at the top, right? Then why are you looking to take it to the top? Because it is not there yet. You need that break of structure to the upside. If we would have got one right here, right? Then now that I'm in my trade right here, I have the ability to now take out these highs right here because we're holding this and we broke structure to the upside. But overall, we still showed that bearish nature, right? Came up, made a lower high, broke structure to the downside again, came up, rated liquidity, broke structure to the downside again, over and over again. And now all of a sudden, I'm in a downtrend over and over again and not that uptrend, right? So stop trying to catch those bottoms when they aren't there yet. Once the bottom is showing, then you can look to catch it, right? And I'm not looking to take it all the way to these highs right here. Most relative areas to look to take profit. This high caused a new low right here. We'll just play this out to where it's at right now. Again, this high caused a new low right here. If I got in longs right here, where am I going to look to take it? To the most relative take profit. Candle before candle that broke structure to the downside with displacement, area of supply. Also has a fair value gap, also has an imbalance. So I could have looked to enter, right? Taking it now to these highs right here. If it broke to the downside and continued to the downside, I'm completely fine. I can now have an entry right here, now targeting these lows right here. But if instead it reaccumulates, right, comes down to these areas, breaks structure to the upside, I now have the ability to target my most recent weak high that is being formed, right? And then I can target the buy side liquidity and then look for overall higher time frame areas of supply for price to go into. So when you are counter trend, look to take profits in premium or discount of your overall trend, your overall range that you have, and don't try to come up with something that isn't there, meaning don't try to take it to all the way to the highs, right, or take it all the way to the lows when it simply isn't there, because you will get very, very frustrated sit there thinking, oh, I don't know what I'm looking at, right? What is all this? Why is the chart moving like this? Why is it acting like this? I don't want this, right? And then now all of a sudden you have these certain situations to where, again, like I was talking about, you just feel like you're lost and you get that analysis paralysis. So we do not want that as traders. Properly trim profits. I personally do it based off of R&R as well as structural liquidity, right? So I'm still trading the chart, but if the chart comes up with a 1-to-1 or a 2-to-1 R&R, I'm not going to look to take that trade, right? There's no reason to risk that when I could wait for a better setup. They will come out every single day. They will come out every single week, right? It's just up to you as a trader to go in there and really do that work as far as looking for these types of setups like that. So now I want to talk about setting goals for yourself as a trader, right? Because not a lot do this, or they do, and they have quote unquote the wrong goals. And why I say the wrong goals is because there's certain situations that, again, like we were talking about with the chart, that aren't there yet. So if you come into trading day one, or even week one, month two, right, and you sit there and say, oh, I want to make X amount of money within X amount of time, then you're already setting yourself up to fail. And the reason I say this is because if you come into trading not knowing anything, right, you come into a multi-million-dollar business that has been advertised as you can make X amount in X amount of time, right? So everyone's like, okay, we can make a lot of money. Let's go to this business over here. And you find that business and you're like, this is a good business. I want to take these trades. I'm going to make $1 million the next month, right? You're already setting yourself up to fail because the amount of hours and the amount of time that needs to be put into these markets and back testing, experiencing, journaling, all of those things, the amount of time that needs to happen for that is going to be way more than you believe. And that's what separates those traders from the actual profitable ones, right? The Twitter traders or traders who are just looking for maybe someone to buy their course or something like that, but don't understand how to trade, right? That's not going to bring what you want as a trader. If you are here for long-term profits, as all traders should be when they're getting into this market, not just a short little lottery win, right? Again, almost 90% of lottery winners go broke because they don't understand what it took to make that money. They don't understand the hard work, right, it took to make that money. So a lot of the times you could see traders out there who make $1 million in a trade, but go look at the report the next week and then see what it's at, right? You'll start to see now exactly what's happening in these certain situations to where traders believe that things are going to go a certain way for them, and then once it doesn't, then they're out, right? But we need to understand that in a game of probabilities, we're taking what we get based off of the available setup. So I'm not emotionally inclined to catch a bottom. I'm not emotionally inclined to catch a top so I can go show my friends or post it somewhere and say, look, I caught this top, or look, I caught this bottom. I'm inclined to make money. I'm inclined to be profitable. If I am not looking for that profitability, then you are not going to be that full-time trader that you want to be, right? If you're not looking for that long-term same setup over and over again, then you're not going to be that trader that you want to be. But set those goals for yourself and set them based off of percentages if you're doing profits, meaning look for 2.5% of your portfolio for a week. And you'll start to see, if you think about it as percentages versus I got to make this amount of money in this amount of time, then it's going to bring so much more clarity when you're looking to trade these charts, right? And looking to trade these assets. Because now instead of saying, oh, I need to make 2% a day, or I need to make this during the day, and then when you fail, that's going to hurt even worse. Because now you're placing something on yourself that is not there yet. You're placing a 2% goal on yourself when it isn't even there yet. You're placing a whatever it is on yourself when you haven't started to sit down and say, okay, this is what I want to do. This is how I'm going to look to trade. This is the time I'm going to look to trade. This is how many trades I'm going to look to take. This is how many trades I'm going to take before I stop, right? Before I stop trading during the day. How many losses are you going to take before you stop trading as well? There are a lot of goals that we need to come into play as far as what we need to do. And that's going to tie exactly into when you're going to become profitable as well. Because the minute that you sit down, the minute that you open up a journal, and the minute that you start writing down your losses and your wins and the reasons why, the time that it happened, how long the trade occurred, how long you held it, everything. Once you sit down and actually look at all those intricate details, then you are going to become better. And the reasoning I say this is because now you have the ability to look at both your strengths and both your weaknesses when you look to take trades, when your best trades hit, right? And now you have the ability to come to the charts at that time and say, okay, I always have trades that hit during New York session, so I'm just going to trade New York session on this pair and this pair because I'm the most profitable on those based off of my journaling, right? Based off of the data of myself. So if you're not journaling, then over and over again, you will get stuck in those cycles to where you don't believe you know what you're looking at. You need to have that mechanical business type system to where you're looking for the same thing over and over again. That mechanical system to where every single box is being checked on both the technical side and the mental side. When are you going to look to stop, right? If I take 2 losses during the day, then I look to stop, right? As we talked about with the human emotion thing, you can only make 1 to 2 emotional decisions and process those as a human a day. So if you're sitting there making irrational decisions on your 5th or 6th or 7th or 8th trade, right, then it's not going to go the way that you want it to go. And you will either end up unprofitable for the day, red for the day, blown account, whatever it is, right? So start to set those goals for yourself and you will become profitable when you journal them. When you put that down, write down what your strengths and weaknesses are, write down the trades that hit, write down the trades that didn't hit, then you will start to become profitable. I guarantee you. That is the last step as far as what you need to do as a trader to look to gain profitability all the time. A lot of traders just look for the new strategy. If theirs doesn't work, they go to another strategy. They look for something else, some type of other way to look at the charts or other way to trade. And then they just confuse themselves when all it is in reality is it's going to come down to your psychology, right? The market and this trading in general is literally 80 to 90% psychology and 10% technical analysis. Once you have your technical analysis down pat, you'll start to see now it's just all psychology. It's all looking for the setup to come into play, staying disciplined for that setup to come into play. And then once it does, then you're good to go. But looking at these charts and looking at these certain situations and looking at these setups that come into play, right? Looking at these certain scenarios, it's just going to be over and over again. If you maintain that discipline and that ability to look for the same thing, then you are going to be profitable because now you know what you're profitable on. You know when it comes into play. And once it does come into play, you're entering your trade, walking away from the charts, come back to money every single time. And now days are 20 minutes, right? Your work days are 10 minutes, 20 minutes, 30 minutes, whatever it is. And you're not doing 4 or 5 hours of analysis on a certain pair to try to come up with something that isn't there yet. So just a quick tip as far as how that goes and how you will be profitable. It's going to come from that discipline, right? That discipline is just putting everything down. So with that being said, I wanted to get into a Bitcoin and ETH analysis now. Before we get into the weekend, we'll talk about the chart. We'll talk about what we're looking at as far as direction. And also, if anyone has any charts or anything like that that they want me to look at in our last 10 to 12 minutes here, then I will go ahead and do that. If you got any questions as well, feel free to let me know. If you are muted, then I can go ahead and unmute you. Just at me in chat, wherever it is. Stream chat, doesn't matter. And I will get that done for you. But let's go ahead and talk about ETH now. What we are looking for, this range that we are currently in. Right? A lot of people are saying they're moving over to stocks indices because of the movements that we're having. I agree as far as this goes, this certain range that we are creating right here. But let's talk about what we're still looking for. I mean, overall, still showing that weekly bearish structure to the downside, right? We have a weekly imbalance that we have right here from 1414 to 1494 on our weekly chart. We could definitely come up, fill that imbalance, mitigate this area of supply, and continue to the downside into these lows right here. Or we could still hold this low right here. And the reason I say that is that 2-day, 3-day, I think it was a 2-day. Yeah, 2-day fair value gap that we had right here from this low that caused a new high. So what we would want to see right here is us leaving highs, meaning creating buy-side liquidity and taking out lows. So if we manipulate lows and continuously manipulate lows into this area of fair value, sitting at 1203, right, to 1118, then we could easily see continuation to the upside at this point. I want to see price squeezing to the downside, showing me that we're leaving highs, taking out those lows, manipulating lows, getting retail into shorts, right? Maybe they see a bear flag or something here. Whatever it is, if it breaks to the downside, then retail's like, okay, I'm going to short it on the retest, Now I'm going to take it to these lows or continuously take it down, right? And then instead it turns into a liquidity raid. They start to short. Now they're the reason that price reverses, right? Because they're putting their stops over these highs right here. We get that break of structure on that market as well. And then we can look for discount within this move right here, look for the higher low confirmation, and then look to take it to the overall highs as well as that overall supply zone that we have been talking about for a while. On the daily chart, we can see it right here, right? That 220, 2,200 supply zone that we have been looking for as far as Ethereum goes. But if we would wanted to look for a short scenario within this certain trade, right, within this certain chart, I would look for the lows to be left. I would look for a continuation to the upside into premium of supply that had caused a new low. I would look for the confirmation of that. So now instead of this, right, let's just delete this, go back over. Now instead of this, I would look for lows to be created on this move to the upside right here into premium. And then I would look for confirmation of a lower high and then take it to the downside, right? Very, very simple situation as far as it goes. Wait for premium for shorts, right? And then if we continue to maintain discount, manipulating lows, leaving highs, and then we get that impulsive break of structure to the upside after filling these areas right here, maybe mitigating this institutional candle on the daily and show that demand being put into place, then we can look for the reversal. But as far as it goes right now, our overall higher time frame structure, right, from our weekly is still bearish, 3 days still bearish, 2-day possible reversal back up into these areas right here. Nothing too strong yet, nothing with impulse that has shown me it wants to take that move up. Right now we're just creating that range, that base. So what we do in these certain situations is now look for premium and discount, look for where price is manipulating, and look for where price is leaving. Right now it's currently leaving lows, right? We can see we're taking out highs as we come into these areas right here, but we are also manipulating lows on the second half of this move right here. So we can see accumulation, price moved higher into this wick right here, came back into discount of this move right here, and then now it is back towards equilibrium. So within these certain times, it is best not to take that bias automatically find that bias and automatically try to take it to the upside or the downside, because until it is there, price won't move, right? Even though you might have thought, oh, I got in early, doesn't matter if you catch that top or catch that bottom, because now if you try to get in early, right, where's your, oh, let's delete this. Where is your stop loss going to be if you try to get in early, right? It's going to be in either this low right here, or if you're shorting, opposite end, it's going to be at this high right here, right? So now you have just this insane increased risk to reward when all I would have to do is wait for the break of structure to the upside to then look for my longs, or wait for the break of structure to the downside with impulse to look for my shorts, right? So keep it simple as far as this goes. There's no reason to find that bias before it's even there, right? We're also coming into the weekend, so it's probably going to be choppy. We could see a few liquidity raids, but we'll just watch structure as far as that goes on the higher time frames. So we can go over to Bitcoin now. And then if anyone has any charts or anything like that they want to send to me or let me look at real quick, we've got about 6-7 minutes, and then we can go ahead and go look at those as well. But if not, that's completely fine as well. We'll be posting the Bitcoin and ETH analysis and lessons for you guys as well, for visual, right? Visual understatement. But Bitcoin as well, I was actually looking at a little bit more upside than I was downside. The reasoning for this is we continuously are manipulating lows, holding discount. You can see we actually didn't come past equilibrium only once right here. Holding discount, creating buy side liquidity, manipulating lows, breaking structure upside, right? We can see we came down into this candle right here, and are starting to move upside. Bitcoin's a little bit cleaner to me than ETH is. It could definitely be reaccumulating, starting to move up into this area of supply, as well as into OTE, as well as taking out all the early shorts before actually making that move to the downside. We are creating a lot of lows as well, so we can see something like this, right, where we come into those areas of premium, mitigate those supply, mitigate optimal trading entry as well, and then show that distribution, and then you now have another accumulation to distribution. What is that going to do here? That's going to get all these people now into short trades, right? they're all going to start to get into short trades to the downside once it breaks these lows right here, once it breaks these lows right here. And that's when we actually have that liquidation to the downside, that reversal to the upside, and we can look for the overall move to the upside now that all the early longs are taken out, right? And now that we are leaving those highs, leaving those areas, the reason to then make that change and make that move, make that reversal, and look to come upside. So this is what I had. I believe me and Dano were looking at this in stream chat yesterday. But these certain situations like this, best to wait for a new high or a new low to be created for the overall direction, right? So that was Bitcoin as far as that goes on the higher time frames. Obviously on our weekly time frame, our monthly time frame, we're still looking for the delivery into these lows right here, those equal lows that we had formed. If we can continue to maintain that discount, right, and leave those highs, then we can look for a continuation upside. But until that happens, we'll not look for those longs quite yet. If longs were available, they would be intraday as far as how I would look to take those, right? So with that being said, that was pretty much all I had for you guys today as far as sticking to your bias when you should look to trade, how to properly trim profits, right? Setting goals for yourself when you will become profitable, and your little Bitcoin and ETH analysis. So if there's any questions or anything like that, still looking at GBC or GBP and ZD or not because of the news. Actually, let's take a look at that and actually talk about what happened, because that was this was interesting, right? So we had a large liquidity rate to the downside. I was looking for price to come up into these highs right here, this area of supply, and continue to the downside, filling that wick and as well taking out this weak low. But we had that reversal, and we'll talk about the long that came into play right here as well, because I was actually on a little one-on-one with somebody last night, and we were looking at GBP and ZD, and I said, well, how it looks right now, we had a 15-minute breaker structure to the upside over here. All right, we had that break to the upside right here. You can see we came back down into that candle, mitigated that, and then we had that move following. But within this certain area and this certain time, this actually goes perfect with our disapproval theory as well, because I was looking for price to mitigate this area of supply and continue to the downside. Yes, the live was recorded, will be posted to YouTube after. I'll send it in lessons for you guys. But looking at this right here, we broke structure to the upside. We were manipulating lows, right, and showed that impulsive move that came up like this. So a long opportunity then came into play. Where was I targeting? This area of supply. What happened when we got to that supply? Did we get confirmation of downside? No, we didn't get any new lows yet, so I wasn't looking for those shorts quite yet. And then news hit, and then we had that large move to the upside, right? So I was disproved on my shorts at this point in time. But even though I still had that counter trend long, right, that counter trend long just turned into a pro trend long. So that's how we can catch those situations as well, because I'm only looking for this at this time. I was only looking for this low to this high into this area of supply. We came up into that area of supply, and then it took off, right, during the news. But as far as what I'm looking for overall on GBP and ZD, now that we have had that impulsive move to the upside, we could definitely see a reversal into buy side liquidity, into supply overall. We can see that we created a daily fair value gap as well. We'll watch how this close happens, and then we'll look for a possible move into this area and possible longs overall, right? But one thing too is if we maintain this high and break structure to the downside with impulse on the 4 hour, then we can look for delivery into these fair value gaps, right? And then if it respects those, then we can look for continuation to the upside. If it doesn't, then we can look for the continuation to the downside overall. So it is a tricky spot as far as GBP and ZD, but it does look like it started to make that upside overall. So we can look for these areas to then look to long. If we can show lethargic moves to the downside as we come down into these areas right here, then we can look for that continuation then to the upside at this point in time. But yes, overall, I mean, on your monthly chart, see, looking at the monthly, we're starting to see possible moves to the upside. It could even just be coming to take out these highs right here, right? This buy side liquidity right here, mitigating this monthly supply. As you can see, we haven't even mitigated it, right? Monthly supply, your candle before candle that broke structure to the downside. So it could be coming up to take out this buy side liquidity, and then we could see that continuation to the downside. Because something is too that I had noticed that is super, super interesting is that this wick that had come down took out lows from July 19th, took out lows from December of 2020, right? And but it maintained this low from December of 2018, and it actually created new lows instead of licking those lows and taking those lows to the downside right there. So we just created some more sell side liquidity. If we can come up, take out this buy side liquidity, and then make the move to the downside, then this is where I would be looking for shorts overall, right? But until that happens, we'll look for the structure within here. If I get an hourly break of structure to the upside after coming down into those areas that we were looking at before, then we'll look for continuation upside into these highs right here, into this area of supply. And then from there, we'll probably look for downside. But tricky spot as far as this goes. I'll be watching the H4 structure for that certain narrative as far as that goes. But yeah, that was GBP NZD, what we were looking for that. Until those shorts are coming into play, we're not going to be looking for those shorts. Obviously, overall, we're still bearish, but we did have that large impulsive move to the upside after the liquidity raid. I'm going to go ahead and look at mentions. Yeah, I think we're good to go. If anyone has any questions or anything like that, just feel free to let me know now. I'll just be sitting here for a minute or so, but until that happens, I think we are good to go. Everything that I wanted to say to you guys today has been said. I appreciate everybody who has popped out sitting here on a Thursday night. The fact that you are even here is already putting you 90% above 90% of traders, right? The fact that you're even sitting down listening to me rant to you guys about how to be profitable, right, for an hour already puts you above the rest, because most aren't even patient enough, right, to watch a 20-minute video or patient enough to try to learn. They just want to find that strategy or find some dude who can do it for them, right? When in reality, if you want to maintain that long-term profitability, it's going to come through that independence of going to these charts and seeing this happen for yourself, seeing that pattern recognition, right? And starting to get that analysis stuck into your head to where if I post something out there, then you know exactly what I'm looking at, right? Instead of being like, oh, I don't know, you know, I'm FOMOing or I'm fudding or I'm taking profits because I like the money, you know. Instead of getting in that situation, now you know exactly what I'm looking for, and now you know exactly what Playboy or Casper is looking for. So you can start to follow that narrative as well. And if I or Playboy or Casper was wrong, then you would be able to understand why as well. And now you can have these learning situations instead of discouraging situations, right? So again, thank you everybody who had joined. Thank you everybody who had popped out. This was recorded. Will be posted to YouTube after I'm done editing it. If there are any questions or anything like that that I did not get to, just feel free to at me again. I don't think so. I think we got to all. So again, thanks to everybody. I hope you guys have a great rest of your day and or night, and I will catch you all soon.